Welcome to the mid-year recap and outlook. I'm Basil Jason Go, Head of Equities.
What transpired in the equity market during the first half of this year?
Year to date, the Philippine market is up slightly by 0.72%. If you translate this to dollars, the market is up slightly by 3.13%. Over the last 1 month, the best performing equity market in ASEAN has been the MSCI Philippines and MSCI Malaysia, with both up around 3% in US dollar terms, outperforming MSCI ASEAN, which was up only by 1%. The US dollar and peso exchange rate saw a big move lower after US CPI data for June moderated more than expected, and the consequent adjustment to the Fed rate expectations beyond July. This would support the Fed's expected hike in July, being the last one in this hiking cycle. In fact, the peso is the second best performing currency in ASEAN. From a technical standpoint, the US dollar has broken down and may have already peaked in September 2022. Furthermore, first quarter earnings for PCOM index members is up 35% year over year, with 84% of companies reporting numbers that are in line or better than consensus. We have reason to believe that demand continues to be strong for the second quarter. It is normalizing but not fading. Margins are still expanding. Foreign investors have sold a total of $424 million this year and have cumulatively sold $7.3 billion since 2018. We have witnessed value turnover of $40.4 million and $43.8 million in the first 2 trading days of July, the lowest since January 2012. The streak of foreign selling and historically low trading volume indicates extreme bearishness and apathy for the Philippine market.
Why do you think investors should remain optimistic?
As mentioned earlier, we believe that the US dollar may have already peaked, and from a technical standpoint, there is momentum for further weakness. Therefore, a stronger peso usually translates to a stronger equity market. We believe that the PCOM index is priced attractively, as it is currently trading at only 13 times 2023 PE. This is nearly 2 standard deviations below the 10-year moving average. We believe that the equity markets are underappreciated for 2 reasons. Firstly, the liquidity injection from the PSEi delisting. Assuming the delisting pushes through, this translates to roughly $54.8 billion pesos or $986 million, which is basically the opposite impact of when an IPO happens. The company has around 12% foreign ownership, conservatively assume only 67% of the float will remain domestic equity markets. This will still leave around 37 billion pesos of additional liquidity that will need to find a new home. For institutional investors like us who equity mandates, chances are we would have to redeploy these proceeds to other index issues. Secondly, a longer-term positive catalyst for the market is the eventual migration of South Korea from the MSCI Emerging Markets Index to MSCI Developed Markets Index. Currently, Korea has a 12% weight in the MSCI Emerging Markets Index. There's strong political will from the Korean government for this to happen, as this will improve their corporate governance. And recall that Korea is already placed in the watch list by MSCI as early as 2008, but was later removed. MSCI acknowledged the measures provided by the Korean government, and at the beginning of this year, aims to improve 9 areas in the market accessibility, but also said that the impact of these proposals would thoroughly be evaluated with the international institutional investors once these measures are fully implemented. Note that many of the proposed measures are expected to be started next year, 2024. So a realistic timeline for Korea's migration will probably be in 2025 to 2026. We believe that it is only a matter of time when Korea will be migrated. One flow estimates range from $800 million to $1.2 billion worth of inflows to the Philippines should this happen. The last time the Philippines had around $1.1 billion worth of inflows was in 2017, which led to the market going up by 25% that same year.
Any parting words?
So I would like to end. In summary, the domestic equity markets has witnessed over $7.35 billion worth of foreign outflows since 2018. Foreign investors are apathetic to the Philippines. Therefore, it does not take a lot of foreign buying to move the market higher. The market is underappreciating two upside risks, namely the MPI delisting and the potential migration of Korea from MSCI EM to TM index. Given that we may have already potentially seen the peak in interest rates, inflation, and US dollar strength, the second half of this year may shape up to be a good period for the domestic equity markets. We remain optimistic and have our year-end index target at 7,400, which translates to around 14 times 2023 PE, below the 10-year average of 16.27 times. Investors have to be patient, think long-term, and I would like to end with this Chinese proverb: the best time to plant a tree was 20 years ago. The second best time is now. That's it. Thank you and see you next time.